Hello, my name is Darius McDermott, Managing Director of Chelsea. Today I am here to interview Paul Spencer, Fund Manager of the Franklin UK Mid-Cap Fund. Paul, where are you currently seeing investment opportunities and how is this reflected in your portfolio?
We've got the usual smattering of special situations such as Cairn Group in the portfolio. We're also overweight housing exposure in the UK. That's via the builders, merchants and the house builders. We're also overweight wealth management through companies such as Rathbones, St James's Place, also Jupiter. And geographically we are very overweight the US at the moment. We see that as hopefully the least dirty shirt in terms of economic growth at the moment.
You are running quite a focused fund at the moment, around 40 stocks. Why is that and how does that reflect versus your long-term average?
The reason the fund is focused is I genuinely believe that to run a high conviction portfolio is the only way to really make an impact when you get your stock selection correct. The longer average has probably been about 45 stocks. We're trending at 39 at the moment, and that's a reflection of the fact there are probably less genuinely attractive new ideas at the moment. And more latterly we've added stocks such as IG Group and RPS, where we've taken advantage of weakness in the share price and a bit of market volatility. And we sold Filtrona that we've bought exceedingly well. It's performed very well for us and has reached our target price. But I think we can make a real difference by adding one or two stocks where we really have high conviction.
Are FTSE mid-cap funds more volatile? And what sort of sector diversification do you like?
I'm not sure that mid-cap funds are more volatile. In any case, volatility sometimes presents opportunities. So, when we've had very weak markets, weak volatile markets, we've used that as an opportunity to pick up stock. In terms of geographic or industry diversification, it's very, very widespread in the mid-cap. Unlike the FTSE 100, 250 is very geographically diverse. In fact, it's a slight of a misnomer. Overseas earnings probably account for about 55% of the 250. The UK is probably only 45, and in terms of industries, the biggest single sector is actually about 4 or 5% of the index.
It is often said that the FTSE Mid-Cap Index is the best of British. Is it as domestically biased as one would have thought?
Certainly, I think the best of British is probably a little bit of a curate's egg. Best of British doesn't necessarily mean it's actually only operating in the UK. We've got some fantastic, high quality, genuinely blue chip international engineers and capital good companies. And certainly, numerically speaking, the FTSE 250 does have a lot of UK biased stocks. But as I commented before, the actual balance of earnings does come from overseas at the moment.
How has the liquidity in the index been recently and how has that impacted on your portfolio construction?
The liquidity certainly has tightened up in the past couple of years, but my portfolio is very long term. We're taking very significant long term views on stocks, so from a day-to-day perspective it hasn't really had any impact on the portfolio. In terms of general liquidity, we are finding ourselves able to reposition as and when we want to do so. So it hasn't really made any impact on the actual holdings or the size of the holdings in the portfolio.
What about the macroeconomic background, both economic and political? And how are you factoring that into your stock selection and portfolio construction?
Yeah, the macro outlook is certainly very, very difficult. We've got sort of a European suicide pact. We've got US fiscal cliff approaching and slowing growth in China. The background that we're operating in really makes it very difficult. But we generally take a very, very broad macro view and a bottom-up stock pickers within that. So we have to be very cognizant of the fact that various geographies are operating in quite a difficult environment at the moment. In terms of absolute valuations, I think it's as tricky a time as I've ever seen to actually get value out of high quality stocks. The difference in rating of the high quality against more cyclical stocks has probably never been as wide as it is today, so it's making stock picking in that environment even more difficult.
What has the performance of the fund been like versus both the benchmark and your peer group?
Well, I'm very pleased to say that both against the benchmark and the peer, my fund has performed exceedingly well over any time period that you'd like to sort of pick out. I've been running the fund since February 2006. I'm very proud of the fact that the long-term performance is very consistent and hopefully that can continue.
Paul Spencer, thank you very much.
Pleasure.